What's going on, guys? Welcome back to another great video. Today we're going to be discussing a couple different earnings reports and some earnings trades. So today in after hours trading, once the market closed, there were multiple companies reporting earnings, but I was specifically focusing on Apple, Starbucks, Lyft, Etsy, TWLO. I ended up trading Apple, TWLO, and Etsy. So we're going to review the trades on those three different stocks, and then I'm also going to give you guys a little bit of a mini lesson on the earnings reports plays. If you guys have already seen, I think, the past two videos I've done on this specific topic, what we've been doing is using the implied move from the options market to anticipate how much these stocks should move on their earnings report, and then we kind of base some trades around that. So if you're not too caught up on what I just explained there, you should definitely go back and take a look at the first two previous videos I made about Snapchat earnings, and that should get you caught up to speed. So let's get into it and start going. So here is TWLO. This was the first ticker I ended up trading in after hours. Made almost $250 on the trade. All right, so total shares purchased there was 100. So here we go. The implied move or expected move for TWLO today on the earnings report was supposed to be around $10, okay? TWLO closed on the day at about $108, and the move down to this red dotted line would be the $10 move. So, of course, I put a support level at this $98 price. Again, we closed at 108. The price down here is 98. That is a $10 difference right there. Okay, so I put a support level here saying, okay, if TWLO comes down to this level, I'm going to start considering to buy if the price action looks good. So TWLO gets smacked down, and then it gets pressed into the 98 and starts to snap 98 with some pretty aggressive selling pressure. And that's when I started to buy in. So I started purchasing pretty small shares. I bought 50 shares at $94.37. And as the price action came lower and we got a nice big green bullish buy candle, I added in more shares. I had another 50 shares at $88.52. So the first purchase there at 94, second purchase at 88.52. That's going to help bring down the average. I believe at that point it brought my average down to about 92. I think we got to my average is about 92. So once we started to break over 90, 91 or something like that. So once it started to get up and over 90, 91, I was going to the green on the trade. So as you can see, we pop up. I sell my first bit of shares there at 92.35. Then we pop up to 93.68, and I sell another 40 shares. And then we pop up to 96, and I sell my last 10 shares on the trade. So 2 buys, 3 sells as the total trade. And I'm going to zoom in here a little bit more just in case you guys can't see it too well based on the way the screen is showing the stream. That just got all weird for me zooming in. Okay. So the price action, of course, comes down, boom, boom. We take a buy here at the bottom, another buy here, and then there's 3 sells going all the way up until we started getting to some of these moving averages and that 98 price point. All right, let's move to the next one. And the takeaway here from this, before we move on forward, the takeaway here is, though the options market was implying about a $10 move, we got basically a $20 move. So that's just to go to show that this strategy isn't picture perfect. Just because the options market is telling us one thing doesn't mean that's going to happen, okay? So now let's go over to Etsy. Etsy is a good example of where the options market was actually correct for the day. All right, so if you look at it, ready? I have a level there, and I have a level there. Those are put on the chart before the market closes. I figure out the expected move that the stock should have before the market closes so that when we do close, I'm already prepared and my price points are already mapped out for where I would like to take a trade if that price point is then met. All right. So what ends up happening? Etsy is supposed to have a $5 move, Etsy was supposed to have about an $8 move on their earnings report, and in fact, they did. If you look at the top here is 56, and the low here is 45. Okay, so if you do the math, 56 to 45, you'll come up with just over, right? Maybe just a little bit over $8. Okay, so you come out to about 9 there, right? Oh, wow. Terrible math. Excuse me. 11. So this one had just close to the expected move, right? So this was a pretty accurate representation. From the high to the low was about 11 points. We closed at 53, and even down to the low there is 8 points, right? So if you go from the top here, it's a little bit over the expected move. If you're to go and measure from 53 down to 44, you're getting the exact move. So here we are. This was a trade made. So Etsy kind of pops up. It really kind of jumps on some shaky trading. And I'm like, well, you know, if this starts to roll over, everybody who bought up here is probably going to start selling out. So I'm going to look to get short below the closing price and the VWAP here. All right. So as Etsy starts to come down, I put in an order for 1,000 shares. I wanted to get filled 1,000 shares short at about about 52. Yeah, I mean, I had an order in for 1,000 shares at 52. It was on the ask. Next thing you know, I only get filled 48 shares, and then the price starts to go down. So what did I do? I ended up canceling the rest of my order and just said, okay, that's fine. I'll ride out the 48 shares, okay? So we ride out the 48 shares. We go from 48. All right, I got my 48 shares at $52. Jumps all the way down to $49.97. So pretty much just an instant $2 win. I really struggled to get out on this candle. I tried to get out at the low here at 48, couldn't get it. I tried to get out here at 49, couldn't get out on the bid. And then eventually I was able to get out here close to the $50 mark on the bid. So it took me quite a while to get out on that trade. And you can also see, I mean, the volume wasn't extremely heavy. So that was probably a proponent to why I couldn't get out so easy. All right, so there was a first trade or a second trade. And we were able to lock in about 97 bucks there. And then we had Apple. Apple is another good example of when the implied move isn't really correct. Ooh, wrong ticker. All right. So Apple, I believe, was projected to have a 12-point move. Let's clear this up before we get into everything. All right, so Apple is projected to have a 12-point move. If we do the math, let's see if it comes out correct. I believe Apple, so let's see, closing price is down here at about, let's call it 243.50. All right, and the top was here at 252. Yeah, we'll just call it 252. Okay, so from 243 up to 252, you do the math, that's 7, 9, 10. So pretty close to a 12-point move. So it was still off by a little bit, right? We weren't exactly to the T. So that's just another example of when we're not getting the true exact move that the options market's telling us. But we can have a pretty good idea as far as, you know, it gives us a good measure to go off of, right? So if I shrink this, what are you going to see? You're going to see two price levels of kind of where I wanted to take a short. I want to take a short close to around that price point, and I'd want to buy a bounce close to this point. So if we came crashing down this way, I'd be looking for a bounce. If we skyrocketed all the way up to here, I'd be looking for a short. All right, so as I zoom back in here, let's put the trades on. So anyways, we get this big spike up on Apple, and Apple doesn't keep going. Normally on a really strong report from Apple, it's going to pop and it's just going to keep squeezing like crazy, right? Until then it slows down. This one just popped instantly, and then we started getting sold into really hard. So pretty much as soon as this pushes up, next candle opens up, pretty strong bearish candle. Next candle gets hammered back down, very bearish. And then we're kind of hanging out, right? Let me zoom in a little bit more. Okay, so then we come down here and we're like slightly bouncing, and the volume really wasn't all that significant. Let me pull this up here, sort of. All right, we come down, right? So we squeeze up, then we pull all the way back. And to bounce, you'd want some strong buying volume, but there is none. We have just one kind of buy candle here, Next thing you know, it's another red candle, and the selling volumes is steadily increasing, staying pretty heavy there. So with that being said, I'm like, well, if it's going to spike up, push all the way back down, and the selling pressure is going to continue, let's take a short trade. Okay, so I end up getting short here, 400 shares at 248.81. And then as we kind of drop out, break down the 9 moving average, I cover up 75 shares at 247.56. We come down, we actually don't come down anymore. We actually spike up a bit. I take off 150 shares at 247.84. We come down a little bit more to 247.45. I take off another 100 shares. We come down here to 246.87. I take off 25 shares. We come down here to 246.85. I take off another 25 shares. And then as we start to press up a little bit, I closed out the trade at 247.81. So a lot of different transactions there. So the first trade I took here, the entry, was on the ask. So I shorted 400 shares on the ask. So I got the best price possible at that current moment in time. And then as I was coming down here, each one of these transactions was on the bid. I was buying the bid. So I was trying to get better prices on the way down to maximize profits, basically. You can just put it that way. So nonetheless, we come out with a $482 win there on Apple, right? So all this of what I'm showing you is to get you guys to understand that these earnings reports are very tradable. Of course, there's always a risk involved. These are very volatile moves, but they're very tradable when you plan out well ahead of time and have a really good understanding of what can happen. Once you know or have a good idea of what can happen, then you can really plan for it. So that's what we've kind of been doing here at Boiler Room Trading for the past, kind of couple weeks. We've really been dialing in on a lot of these earnings reports. And trying to simplify it for a lot of people to trade them. So I hope you guys liked the video, and I hope you learned something new today. And as always, thank you for tuning in. Subscribe, share, like the videos, whatever you got to do. We appreciate it, and we'll see you guys on the next one.